Maybe now you'll hear me. I think now you'll hear me. Still no sound. Did you during the weekend? How about there? There we go. Here we go. Okay, there we go. Oops. Sorry, everybody, and Yano, sorry. It's for the first time in a while. Robin called me. I cannot believe I didn't even. I was on a roll. I was on a roll. I wasn't paying attention to the chat line, and I was just rambling. I was beating up on Powell and how Powell and the rates, and oh my God. Jackson Hole. Sorry about that. Everybody, sorry about that. Now I'm back and I'm functional. So anyhow, let's go back to Jackson Hole and finish that train of thought. Okay, so in the end result is that the markets... Geez, I even had a good joke. The markets are trying to tell Powell what to do. And the market and so they keep on, maneuvering, and they keep on acting like, okay, Powell is going to lower rates. But Powell is not biting. He's not believing it. And he's basically telling them, no, this is the way it is, not the way you want it to be. And that's exactly what's going on with the markets. Now, as I've been saying that, the Dow has gone from 80 points when we started the webinar, and it's up 172 points now. And obviously, it wasn't because of me talking, because no one could hear me. Unless I have a secret microphone in here. But in the end result, oh, there we go. There is Mountain. Hey, Mountain. Let's see. Still no sound, still sound. Okay. Now we hear you. For any day traders out there, AUD and NZD looks like they are going up today. Let's check them out. I am surprised at the surge. Yeah, it is surprising, and I think that I fall back to the classic Wall Street nature of it all, and that nature is markets like to anticipate future movement. It's the classic buy on rumor, sell on the news, and right now the rumor basically is that we're at the end of the rate increases. So in other words, if they kick up another quarter or a half, the markets are not going to be disappointed. Matter of fact, the opinion on Wall Street right now is that if they kick up two more quarters, like a quarter increase in November and a quarter increase, or I guess it's October and November. If they do that, if they skip September and they do October and November, they're going to break something. In other words, it's going to be like the way the California banks went down a couple months ago. They're going to break something. Something else is going to have some matter of fact. They've probably. Yeah, here you go. I'm going to give you a train of thought that it just hit me in the head. Ouch, it hurt. They've broken China. China is broken now. In other words, they can't handle the rate increases. They have enormous amounts of debt. They're not even able to bail out, simple things as like $200 billion. Again, we've said this over and over and over. They are not a $19 trillion economy. They're not the second largest economy in the world. They're basically collapsing slowly and steadily. And now the world is starting to see it, with them declaring bankruptcy for their largest real estate company. And if they had that type of equity, I used this as an example last week, they would have done what Switzerland did. All right? Switzerland found a way to get $8 billion to Credit Suisse. They found a way to bail it out, and the currency went from 0.90 of the dollar up to about 101. They felt the pain, and they resolved it, and then they found a marriage to close it off, with another company and so forth. And the Chinese can't do that. They just don't have that ability. Let's see. Resumed trading today and dropped 2.2 billion more in market cap, more than 75% lost. Yeah, if they truly had the ability to be the second largest economy in the world, which is the European Union, that's the second largest economy in the world. they would not allow these bankruptcies and these defaults to go on. And so they don't understand market forces or market economies, or they just don't care. It's one or the other. In other words, they actually think that communism works and that they can just keep on fooling the people all the time, and sooner or later it doesn't. It ends. So, that's that. Now let's go over to the currencies and check out. And I apologize to everybody again for not paying attention to the chat line. I hadn't turned it on. I've been late on things all morning long. Poor Robin had to wait an hour for some stuff today. I've just been not hungover from the weekend, but kind of out there somehow. Anyhow, there is, what is it? Where's Mountain at? Mountain said, what did he say? AUD, the Aussie dollar pairs trade. Let's see what the Aussie dollars pairs trade looks like. Aussie CAD. Where's the Aussie dollar on here? What was the other one? Let's see if I have that. NZD dollar. That I have right there. There's the NZD dollar. We're in that weekly sell, so it's been gliding down for a long while now on that. What did Mountain think they were going to do? This is let's see, for any day traders out there. Okay, so it's an intraday thing. There, the AUD and NZD looks like they are going up. Okay, and you can see it is. It's up higher today than it closed yesterday. And unfortunately, our daily. Let's isolate that even more. And our daily went into the buy here for a couple days. Let's put that in there. Let's steal this one. Just move it over like that. Went into the buy there, and then it went back into the sell right there, and it didn't really go anywhere. I mean, it made another low, and today did not take out yesterday's low. What's your time frame, Mountain? Are you looking at like your 15-minute or 2 hour, or which ones? What are you looking at there? So that we could try to focus in on it a little bit better. And let me go over to Aussie dollar too. Let me just save this. Save workspace. Let's see. It's more than 75 loss. UBS started recently that they will do without the $8 billion bailout. Beautiful. That's even better. Credit Suisse lost the $4.4 billion in Q2 in 23, and that hit the news this morning. Okay. Time frame already posted in it. Oh, let's see on the chat. Let's see. 30-minute. Okay, 30-minute time frame. Let's take a look at it on a 30-minute. We'll take a look. Let's do this. Let me make a copy of this and put the Aussie in there too. Copy window. I could have sworn I had that in there. I guess we moved it to AUD CAD. I think that's what it was. That's what I should have done. Okay, it doesn't matter. We'll go like this. Let's put AUD CAD in there. Or AUD Aussie. AUD. There it is. Do this one too. Yeah, I mean, Europe. It's hard to believe, but Europe is an actual example of efficiency compared to China. And I just saw you passed another law in the European Union, stop free speech. Oh my God! You can't invent these things. I mean, in other words, like you couldn't invent them because they're so crazy. So they actually passed laws to do it, so they're actually real. That's the weirder part out of it all. Okay, so there, yeah, it's doing the same thing. They're both lifting up. Let's see what the half hour looks like. We're going to put a half hour chart of these things up with my intraday system. Open workspace. No, open workspace, yes. I see. Let's go to there, and we'll check that out. Let's see. Mountain West says time frame. Okay, Credit Suisse. Yeah, I'll tell you, we cannot, people are starting to realize what we've been saying here for a couple of years. you can't trust. Um, you really can't trust the statistics coming from China, and now it's becoming very clear how bad it is. When it comes to that whole question mark of what they're up to. Okay, so let's go like this, and what we're going to do is we're going to make this a 30-minute. There we are. And let's see, what else are we doing here? And then we're going to go back maybe like 10 days. Let's try 6 days to start off with. And let's change the instrument to Aussie. There it is. Let's see what that does. There we go. Okay, that's cool. Yeah, look at it. It's moving up nicely in our work too. It went into the buy right. There we go. And we don't, in this case here, in this intraday, when you have a green and a red and it's above the zero line, it's a buy, because it's reflecting the volatility coming more than anything else in a short-term basis. And you can see there, the buy was right there. Right there. Let's just double check. Plot 1 is a plus, plot 4 is a plus, and no, plot 6 is a minus. So the buy didn't come until right there. There we are. So we've been in the buy from there, from that point right there. We'll extend it up for you. So that's where we went into an intraday buy. And this would be where we went into an intraday sell. Maybe not there. Yeah, right there maybe. Let's see. Plot 1 was minus, plot 4 was minus, and plot 6 was minus. So that was the sell right there. Let's make that like yellow or something like that, since we're using it on both buy and sell. So that was the sell all the way to here, I guess you could say, down to there, and went into the buy right there, like so. There we are. And let's see, 2 winner chicken dinners. There's the last buy right there. That was a nice win too. And then we're going to make it so that our Chicago quant platform, this one right here, is going to have that. That's why we're asking for beta testers and asking people, we're going to get that intraday in there too. And so you'll be able to tune into intraday freshly all the time. Let's see. So that was nice. And then did it go into the sell here? No, did not. Not there. That's not a sell. And that is not a sell. Nope, not a sell. So it was in the buy from here all the way to there. Is that it? Or is it there? Let's see, which one was it? Is that the minus all the way across? Plot, where isn't that? Plot 1 minus, plot 4 minus, plot 6 minus. Yep, that was the sell. So it was a great buy right there, and a great sell right there, and now another great buy. So how's that, Mountain? All good? Now let's see what that other product was. NZD. Let's see what the Kiwi was doing. Let's see how the Kiwi marches along. NZD. There we are. That went into the sell right there. And then the next one was an instant gratification. And then it went into the buy right there. And then this one went into the buy right there. And it did push into the sell right there. And it went down for a couple bars. And then, did it go into a buy right there? That's 0, that's 0, and that's 0. Yep, that's the buy right there. We caught that little wave. So the half-hour system, pretty good with our mathematics. Not bad. And that is the story. How'd you like that, Mountain? A-okay? Oh, cool. Very good. Same time frames? Using the fast stochastic and slow stochastic on a half hourly, or whatever. Whatever you say, I'm listening. You don't have to tell us if you don't want to. It's okay with me. Well, what's Janos saying here? Let's see, mountain time frame already posted in the chat. Oh, okay, good. What are we seeing on the M30? If the same chart was daily or weekly, everyone would have been long on this a long time ago. A long time ago? I saw the daily. It's been in a daily sell. It's like right there. It went into the daily sell there. It's been in a weekly sell for months. No, not months. Weeks? Since the beginning of... in the middle of July. So it's like 6 weeks. So it's been in a weekly sell, and it's been going down, 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 down. You know, it has its bounces. And you had a little buy there for a couple of days, but now it's back down again. But this time, it's trying to make a turn. We'll see. So far, I'm waiting for the fast is trying to get through the zero line. That's pretty good, but it hasn't happened yet. So I'm not too excited about the long side yet. Let's see. Mountains. Is it? Yano says, trust Chinese stats. Nobody never looks at them. Yeah, I liked how they discontinued the labor stat. You know, the youth unemployment of 21. Everybody under the age of 21, it's down almost 22% for the quarter or the month, and so they decided to just eliminate it. They don't report it anymore. Talk about classic Stalinistic stuff. I mean, wow. Oh my God. Let's see. Yana says that they are rarely even shown on economic calendars. Nothing moving during their releases. The only exception is the GDP. Yeah, right. I agree. And I have the same program. Mountain West, actually, no, I don't use the fast and slow Stokes. I use different type of signals, but give the same results. Well, that's good. Mountain says, Doc, yes, it's on the daily sell now. I was saying that if the M30 was daily candles, it would be a buy for sure. Yep, that makes sense. And so, yeah, that's it. But I mean, the Chinese are becoming a joke at this point. I mean, with everybody instead of just me. As I said to Robin, I don't feel that bad about Biden because I've been suffering with the guy for like 40 some odd years alone, and now that he's almost 50 years in office, or he is 50 years plus in office. Now the rest of the country's suffering with me, so I actually feel kind of good. And I'm not usually one that likes, I'm not a big fan of, irony loves company, or, I'm not a big fan of everybody suffering. I'm just not that upset about him because I've been upset with him for all 50 some odd years now. So it's not new to me. Anyhow. That is what it is. All right, and thank you, West. Thank you, Mountain West. All right, getting ready for the U.S. Open? All right, let's see now. Where do we go from here? From here, we jump over to... let's see. Let's check this out. Okay, that's me. I'm on two of these things. Okay, cool. So, let's see, what else? Let me just double check the microphone again. I just clicked on something there. Oh, yeah, there you go. I can hear myself. Okay, good. Anyhow, so from there we go back to, where were we? We were looking at, basically what it comes down to is that interest rates are not going to go down yet, but the markets are anticipating that they are at the top of the market. That's why I was mentioning it on Thursday and Friday. There's some real consistent success traders, what do you call them? Fund managers. And they're traders, but they like to be called fund managers. Oh, what? It's about, U.S. Open. We start watching today. That's what I figured. Figured you'd start to get tuned up for that. The fund managers are starting to say it's time to take on risk. I was saying this the last couple of days that that's the theme at the moment on Wall Street. It's time to take on risk because they think that we're at the peak. And so as far as I hear, it doesn't mean I'm hearing the best news, but I'm hearing good news usually. And I usually won't say it if I don't trust it. And that is that they could raise another quarter or two. They could get the 5 3/4 to 6%. And now it's basically 5.5%, and that wouldn't be the worst thing in the world. It might break something, and actually, as I said that out loud, and thinking about what Janos said, there's a good chance they've broken China at this point. China's starting to fall apart even more and more, and so that is the dilemma. That's the dilemma they're in at this point. And so what we really are going to be watching now is, see if this market, kind of does a saber-tooth bottom, up and down, up and down, and the next thing you know, it finds a new level. And it breaks out of, say, the 4,600 area on the S&P 500 and starts to trap shorts. And when they start to trap shorts, that's when you really get a good rally. And that's the old expression on at the New York Stock Exchange when I was young would be is that the only way you can get a good bull market is if you trap the shorts. They weren't as polite as I'm saying it. They had a different way of saying it, but it meant the same thing. It just had a lot of more body parts in it. Let's put it that way. It was obnoxious but true, very graphic. But in the end result, that's the only way you really get a good bull market is you have the shorts trapped. In this case here, we've talked about it. And that is fund managers are about $2 trillion underinvested still. There's $5 trillion sitting on the sidelines in dollars that are with the funds, but there's $2 trillion underinvested. So in other words, fund managers have been waiting and waiting and waiting for a correction since January, and they're really not getting the correction they were hoping for, like a 4,000 or a 3,500 S&P 500. And so the best it did is it got down to, I guess what is they got down to, like 4,100 and change, almost 42. And, and here we are now at 44 again. Yeah, it's at 4,436 on the index itself, I think. No, the futures. The futures are at that. Let's go over to that spot and look and see. We'll minimize that. Yeah, there it is. It's trading at 435.75, almost 436, and so it gets back up through the 3,500 area. I'm sorry, the 4,500, 4,400, 4,500 area, and it will start to really freak out the underinvested, and they will start to reach even more for the equities, even with them overpriced. And this last month, not the S&P as much, but the Nasdaq has taken its worst beating of the year so far. It looks like to me that's what it is. And so this month, so it made some really tough lows, and it's trying to come back. And interest rates are very, very connected to the Nasdaq 100 or the Tech 100 on Dukascopy. It's the same index, but they call it, the real official name is Tech 100. Excuse me. And so they're very cash intense, whereas a lot of the other companies in the S&P 500 are cash rich. Now there's a lot of cash flowing through them. As I take a sip of my tea, and so that's really the challenge there. Let's see. U.S. Janos says AUD and New Zealand. Any target size of move expected? Mountain West. Yeah. Let's see what he says. Mountain West says NZD US anywhere between 59.24 and 59.77. Okay. So it's more of an intraday point of view than it is a day and weekly thing. But we'll see. Intraday can turn into daily, and daily can get going. I would imagine the thing that, like what I just suggested, is what's exactly going on, and that is that the markets are trying to anticipate that we're at the peak of interest rate increases, and another quarter or two won't mean much more. but it could hurt somebody. In other words, it could hurt, like the housing market, or some bank that just cannot. They've been borrowing short-term, lending long-term, that type of thing. And you can see it's already hurt the Chinese economy. So that's why I call the Chinese economy a colony of the United States. Because if it wasn't for the amount of buying that the United States does with China, they would be nothing. They wouldn't be anything. So that's the thing, is that the American companies have opened up offices. They're using the slave labor. Matter of fact, that's why that basketball player is not playing right now. Is that he was complaining about the slave labor, and we're playing in China, and China is hurting people, and so I think his name is Free. He's from Turkey. He plays in the NBA, or he's not. He was playing in the NBA, but the Chinese fired him. He says the Chinese fired him. He wasn't allowed to play because of the Chinese. But again, that's what it really comes down to at this point in time, is that the marketplace is doing an anticipation as usual. So we'll ride this thing like we usually do, following the math, just the way Mountain follows the math. You follow the math, and in this case, he's following his math, and he works with it, he practices with it, he trains with it. Discipline, 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 discipline. That's the name of the game. All right, where do we go from here, traders? Oh, see, target anywhere between. Okay, there we go. Mountain's giving a target now on the AUD USD of 64.51 to a move up to 64.82. There we go. All right, from there we move over to the euro. See what the euro is up to. And there is the euro. We're going to put it up right there. And you can see the euro, it looks like it's doing a little, well, I guess I thought it was doing a little bounce, but maybe not. That's the weekly. Let's see what the daily looks like right there. And it's feeling a little pain there. Heading down for those longs. And let's put it up on J4X. And you can see there it's doing that same thing. It's playing around with 4 weeks now in a sell. Is that 4? Yeah, 4 weeks in a sell. The fast has been in a sell for 5. And that pressure is on. It's been a glide down, that's for sure. I think I want to say, without a doubt, I don't think it's not a tough thing to say, and that is, money managers really were, they've been, since 5%, they've been trying to tell the market, tell Powell in particular, time to cut rates now. I saw fund managers back in May saying, oh, Powell's going to be cutting rates in July, and here we are going into September, and they're still increasing them. And since then, they've increased them at like half a point, and there's a good chance that at least another quarter to a half is coming up into the 5 3/4, 6% area. So, it is what it is. But Wall Street is underinvested, and they're paid to invest, so they've got to reach and buy. So that's why we get these nice little pops every so often. Mountain West says, my math doesn't take profit target, and I don't make predictions about where a currency stock will go, but these are just the rough estimates. Yeah, what Mountain does is he's picking up the trend, the general trend, and then how he manages it is, how he whatever product he trades to benefit from the trend. We get that. That's basically what we're doing here too, Mountain. And so we're right with you. In other words, we're following trends. Let's see. Mountain says that the currency strength chart means to suggest, what's that? But MATAF currency, a longer move, so it could be much more than that. Yeah, right, exactly. As I always say, daily buys turn into sometimes weekly buys. That's pretty much what it comes down to. At this point, we're in a situation where money managers are undervested, and they need to be invested because that's what they get paid for. And the end of the year is coming, and they're going to look really stupid if they're not more invested by the time the end of the year comes around for the final. And so that's a pressure point. At the same time, currencies, which are the most honest of products to follow, because currencies, it's really hard to fudge a currency situation. And the only you can see, China claims to be the second largest economy in the world, but what I call the second largest economy in the world is the European Union, and their currency, the European Union, the euro, trades. It floats freely as much as it can from central banks. And so the pressure, buy and sell pressure are there. And it's about 50, it's the second most active currency in the world. Now, China is tied with Denmark or something like that. It's or Sweden when it comes to, matter of fact, the kroner is a much more better product than the yuan. The yuan's a fixed unit. It's what they call a convertible unit, but it's not a currency per se. It's just a fixed convertible unit, and so it doesn't float. And sometimes someone has to literally knock on the door and kick somebody in the chair, and say, "Hey, wake up, make a move." We've seen where the currency doesn't react to inflation sometimes, and then all of a sudden, 3 weeks later, someone wakes up and realizes they are supposed to change the fix. So when we watch the currencies are telling us more of the reality of what's going on than say stocks or bonds do. Bonds, that's the other thing, is bonds and currencies are very good at reflecting fair value, whereas stocks are kind of sloppy about that. They panic move, they cover shorts. Depends on the amount of cash floating around. Like I said, there's almost $5 trillion floating around, and $2 trillion of it needs to be invested because they incorporated their funds saying they would invest it. And so they have to invest it somewhere along the next 6 months or 3 months, or they get in trouble. It's one or the other. At this point, it's 4 months, I guess. So it would be September, October, November, December. You got 4+ months. They've got to put themselves in there. So that's why fund managers are walking around going, it's time to take risk. Time to take risk. So, let's see. Yano says, yeah, due to these reasons, one should better execute with trailing stops. Exactly, on an intraday basis, all the time. All the time. You live to fight another hour. Exactly. All right, now from there, let's go over to the cable. There's the cable. Let's put the cable up on right there. The cable, has been a little bit odder in the way it's been breaking down. Let's put it up over here on our new platform too. Where's cable? Cable. There it is. And you'll get a picture of that. There's cable. There. You see it's been breaking down. It's trying to lift up today. And you can see over here on our regular platform, it's just up a little bit for the day, but still a lot of weakness there in the weekly. And you can see here it's over on J4X, same situation. It's still, the slow is trading at 23 and the fast is trading at 9. So we're way down at the bottom of this thing. This thing's trying to find a base at this point. What else is there to be said about all that? I don't think there's much more to be said. Okay, from there, let's march over to, unless someone wants to see something, we'll gladly, go chase something down. From there, we'll go over to the Swiss. There's the Swiss, and you can see it. It's trying to keep on climbing, which is a little surprising. Little surprising. There it is, right there. Actually, it's trying to break down more today, and you can see the weekly. That's another thing. The scaling on this one, doesn't want to have to get that straightened out. That's part of the beta test situation. GBP, we move to Swiss. There it is. And so there you can see kind of the same situation, 3 days in a buy, just like J4X. And you can see that the fast is at 76 and the slow is at 67. So It's showing that strength that's there. And same thing here. We've been across the zero line now for 3 days, not really going anywhere with it, and been in a weekly buy since back in here. And the weekly started right there at that move. And let's see now from here. We'll go over to the yen. I can't wait to see what that's doing. Up. Okay, yeah, I figure so. Closing the daily buy last week. Held that weekly buy. Fast is breaking down here, but the slow is not letting go. And let's put it up over here. There it is. So that is the action we're seeing there. And the yen has become a full enigma at this point. They're still trading a minus. Interest rates on the short term for the 6 month in China. Then they go into like a quarter percentage point, or I think their highest bond is like 1.5, like the 30-year. And so they're really trapped. They just keep on working as hard as they can, but the money situation is really tight. And imagine if you're a central bank and you're not paying interest on your money, you must be in trouble. Because it's not a solid reality there. It's just what they're saying is basically is that if you're a big boy and you have money, you can't make money from us. That's what it comes down to, which is odd. Mountain West says basically what Doc says is the most conservative, safest way to trade, i.e., 30-minute buy turns into 4-hour ones, buy. And that turns into a daily buy, and then it turns into a weekly buy, and requires patience to see that. Yep, that's cool. Mountain, thank you very much for the compliment, and I appreciate your opinion of the marketplace. I appreciate a lot of people's opinions of the marketplace, and when I think something is off, I'll mention it. But rarely does Mountain come out with something off the course, or Janos. And a few of the others who've come in and out of the webinar here. So that's what this webinar is all about to begin with. We're trying to be honest with the system, with the way to trade and the systems in general. I have been shown something. The U.S. market has been opening with a gap up on most days in August and then closing the gap down during the day. Yes, I've been seeing the same thing. I agree with you. That to me usually says it's foreign investors. So what's happening is that the buying has been going on in the first half hour, and the first 15 minutes to a half hour of U.S. trading is basically foreign investors picking up what they need for the day that they transacted, in Europe, and they need to buy it. So then they buy it, and then there's no more buyers. The buyers dry up. Money dumping China and going into U.S. I seen that. I put a chart up on that. There was yes, we've been seeing that of late. Last week we put a chart up on that. It showed that the money flow has been the opposite direction in China, which is very rare, but it's doing it now. The money flow is moving in the other direction. Well, money is trying to get out. As I said for many years here, it's the cockroach hotel. You can get in, but you can't get out. That's the problem. It's a killer. So those factories that they've built there, they're hoping that they'll have that very low cost productivity, and they'll complain in the United States about working conditions on people and how workers are not being treated fairly. But in foreign countries, they will use slave labor and not care. And so, I guess we have an old saying. It all comes down to, it's an old military saying more than anything else, is that it all comes down to whose ox is being gored. And that's what it comes down to, is that they will abuse foreign workers and then turn around in the United States and act like, that $20 an hour is not enough. And then the people in foreign places are being paid like a dollar or half a dollar or 15 cents an hour, and they don't care, and they're working 6 days a week and 7 days a week, and they don't care. But here they act like holier than thou. So yeah, I've seen that. I can go hunt that down. I saved it. It's a chart of money flow out of China, and it's showing that the dip. I think I had it up on the screen. I think Tuesday and Wednesday of last week, Monday and Tuesday maybe when you were gone, and then you came back Tuesday, right? And so I think I showed it possibly Monday because it was something I saw in Zero Hedge over the weekend, last week, 9-10 days ago. And again, that's how money managers, you can trust what some of them are saying. The ones I trust, at least, that I hear from, they're real, and they're not fakes, and they've been around decades. And when they say that they're going to start taking risk, trust me, they're going to start taking risk. They're going to start buying. But remember, they're more than likely they've already bought futures contracts, they've bought options. They use those things, and they buy them, and then what they do is they buy the underlying product, the stock or the bond or whatever, and then they sell out their hedge on the long side. So they participate a little bit with the rally, not as much as they would like to, because they want more hard delta because they're supposed to be invested, So that is that. Now let's go from, where was it? We were in Japan. Let's go to Turkey. Let's see what the laboratory, the experiment is doing today. I mean, they really jacked that thing from the news. Whoa! Down to 25. Look at that. Yowzer. So they knocked it down from 30. What is it? Oh, that's dollar Turkish lira. Sorry about that. Wow. Let's see if they did the same thing in euro Turkish lira. That's why we followed the euro Turkish lira. Yeah, they did. They dropped it down to 27 and change. It's at 28 and change now. So that's a nice big swing from that news. Let's see. Let's check it out on. I'm going to put it on Chicago, the new Chicago platform, and then we'll go take a look. Well, let's do this one first. There it is right there. Yeah, so the last couple of days they've been playing with those numbers, putting pressure on them for the last 3 days. And now they're lifting them back up. Still in that weekly sell from up in here. Let's put it up over here. Let's see, euro Turkish lira. There it is. There we go. Where's that mouse set? Right there. And as you can see right there, now that is the daily. That's interesting. Look at that. The daily is jumping into the buy for the last 3 days. So that low, it jumped into a buy, and it's moved up pretty nicely, whereas the platform we've been using right here is still in the sell. And there's the weekly. Let's see how our weekly looks like on our new platform. I've been trusting the math here. I find it very good. This right here, you see right there. I'm going to get this extended to another 10 weeks out and try to extend the daily a little bit longer, and then get the daily to be matched up to the daily bars, matched up with the daily high, lows, and closes. And so you can see there, it's trying to turn up ever since they pushed it down 3 days ago. And it's been a winner chicken dinner, but we're in the weekly sell, so you can't really take that. But at least you know one thing for sure is don't be short this product. Don't be betting that it's going to go down more. Let's see. Hasbro, the toy company. Monopoly, yeah. Let's see. Dumping China. Let's see. Okay, this will be me being a No, you're not. No, you're not a retard. If you were a retard, I wouldn't be here. Okay, Hasbro money, Monopoly money. Yeah, what about it? Let's see. What caused that drop in the euro? I'm trying to remember the news now. Janos told me what it was, and I kind of forgot it. I tried not to take Turkey too serious, so I let it push right out of my brain. Let's see, $11.39 for a set of 10 bills each. Oh, on where on Amazon? 68.50 Monopoly is 11.39. One Monopoly is interesting 0.0016. And see CBRT interest rate announcement. That's right. Yeah, they jacked it up to 25%. Was it 25%? Or is it 12%? No, 12 and a half? No, the Russians pushed to 12 and a half. I think they're at 25 now, right? Is that what it is? I think they're at 25%. So that's what makes sense why to follow the Euro Turkish lira, because you know that there's trade going on between those two. And so because of that trade, I'm talking about economic trade. Yeah, 25% in Turkey on was it last Sunday night they did that. Last Sunday night? Or what was it? It was 4 days back. So it was Tuesday or something like that. Tuesday night they did it. So Wednesday, Thursday, and reflected it, or they did it Tuesday night, Wednesday, something like that. And so because we're 3 days into it now, and obviously the money has stopped. You can see the difference there. It happened here. Let's see. Let's put this up. Oh, here we'll do this. Let's do this. I'll do it right here on this. Let's see. Where's that? So you have that like that. So the news came out here, and the thing opened down. Okay, what they did is they spiked it down on the news, closed there, and then the next day gapped down, and now it's climbing back up. And we went into the buy here, somewhere's in here, and that's what I guess you could say that's what this is. So we went into the buy there on this day, right here, and I don't think it closed there though, did it? No. Because look at it on here on this and J4X, it shows the difference right there. There's the close. Right there. So it went into the buy there, and it's climbing up. And so that's what's going on there. Yeah. Yeah, well, when you think about it, Mountain, the poor thing has gone from one Turkish lira to 30 Turkish lira to the euro. 31 to be exact. And so, yeah, I'd imagine that the inflation, you have to really feel sorry for the population. That inflation is vicious. Giannis was saying something about that about 6 months ago. He said you walk into the bazaars, the markets, and they don't have prices now listed. They just say, what it is, and give me your price or something like that. Remember that, Giannis, when you told us that? And so that's a really intense inflation. All right, let's do this. Let's jump over to the South African rand. Now that we know that the Mexican peso is not the most powerful brick in the world now. And so there's the South African rand. You can see it's been trying to work its way down, but the last 3 days it's kind of been bouncing up a little bit against the dollar. So that means normally now this thing's trying to turn into a buy, and it's been in a weekly buy there. So what you normally see is in gold and silver and so forth has been kind of sloppy, but still interesting. Gold has been climbing really lightly. It's climbed up when this went down, and now that it's trying to turn, it's kind of hesitating. And so we're seeing some hesitation in there. Let's put it right there. And there is gold. You can see gold is like flattened out for like the 4 days. It can't get going because the South African rand is lifting up. Whereas silver, let's just put the silver up in here. And then you can see silver still in that daily buy and still pushing, but it's trying to flirt with the daily sell today. And it can't get into that. The fast jumped into the buy, but not the slow. So it's really having a problem there too at the same time. Heading over to, let's see, we'll go look at the others. Let's just take a look at oil and then we'll get out of here. There's oil. Oil is trying to lift up. That's usually the Canadian signal for it going down. It has not. Let's put Canadian real quick and then we'll get out of here. Canadian, right, let's see, where's it at? CAD, dollar CAD is right. There's dollar CAD. And so dollar CAD, as you can see, the strength there, it's acting totally the opposite. Normally, it follows the oil market, but it has not been able to. Not for a couple months now. It's been really trapped in some type of let's sell the Canadian dollar situation from the 131 area to now it's trading in the 136 area. So it's really taking a hit on it, from this whole situation. All right, traders, we are out of here. This is Doc. Sorry for the loss of voice for the first 7-8 minutes. And we will catch you all same time, same channel tomorrow. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart day. And U.S. Open tennis matches starting today.